Welcome to Ledgers and Law, Lessons from the Trenches, where we bring experienced business and legal leaders together to discuss current topics at the intersection of tax, law, and business. And now, please welcome your hosts, Kevin McCoy of Carlton Fields and Chris Rux of Cherry Bekaert.
Welcome, everybody. This is episode 3 of Ledgers and Law, a podcast collaboration between Carlton Fields and Cherry Bekaert. I'm here today. This is Kevin McCoy. I'm a shareholder in the Tampa office of Carlton Fields. I do trial work, business litigation, and products liability defense. I'm here with my co-host, Chris Rux. He's a partner at Cherry Bekaert here in Tampa. And we have with us a partner, Chase Wright, out of the Nashville office of Cherry Bekaert. I'll let Chris get into the introductions here shortly. Welcome, everybody, back. Today we're going to be talking about issues that affect the cannabis industry. So without further ado, I'll turn it over to Chris for some intros, and then we'll get right to it.
Thanks, Kevin. As Kevin mentioned, I'm Chris Rux. I'm an audit partner in our Tampa practice at Cherry Bekaert. I'm also the healthcare and life science industry leader for the firm. It's great to be back on with you, Kevin, and looking forward to this conversation with Chase. Chase is one of our advisory partners based in Nashville, who's done a lot of work in the cannabis space from a consultative standpoint. So hopefully we have a great conversation here and dive into some interesting issues. So with that, Chase, let me just start off and throw a question out there to you. You know, in your dealings with various cannabis companies, you know, what are your observations about the lack of service providers or vendors or general challenges of that nature?
Yeah, well, first off, Kevin and Chris, pleasure to be here with you guys today. Chris, I mean, that's real. It is, there are so many providers who are using the federal legislation against cannabis to avoid doing business with the cannabis companies. I mean, it starts with the banks, right? Especially those that are federally insured. You know, they could face money laundering type charges in general should they do business with a cannabis company or a cannabis company that distributes product. There are some alternatives, but not good alternatives, and it goes beyond the banks. It goes to the think about your leasing relationships. Think about your payment processors. You know, and some for some vendors, for some companies, this is a cash only business because of lack of an interaction with the payment processor. There are some options that are new, but it's very pervasive. You know, in general, these companies don't have the same protection under bankruptcy laws in the U.S. that other companies do, and so many because of that, there are many service providers who just shy away. Real problem.
You know, I'll tell you one observation I've seen, gentlemen, is not only on the banking and related service providers, but insurance. I mean, insurance is a huge problem, and I will tell you, I have personally looked at lines of coverage that have been offered to those in the cannabis space, and they are illusory. I mean, there is no coverage whatsoever when you read the exclusions, the riders, and they're still charging a premium. I mean, there is a very niche market of insurance providers who are really giving meaningful coverage to those. I'm not even talking about on the high THC marijuana side, on the CBD side, low THC. And you just have a lot of problems, and it's something that they have to study closely. I mean, they really need to be looking with a fine-tooth comb at any kind of insurance coverage that they may be purchasing for their business, even if it seems as benign as, you know, general liability or employee coverage, EEOC kind of stuff, because there are so many exclusions that become a problem just because of the nature of this space. But that kind of turns to another question for you, Chase. You know, typically, even outside of the vendor context, you talked about this being a cash business, but they need to do fundraising, you know, or they need to do equity events. And traditionally, there are two paths, right? There's private money, there's public money. And what are you seeing in terms of the private money and the deals that are being done and the cost of that money relative to others who are outside of the cannabis space?
Sure. Well, in general, we have seen a lot more interest as more states come online, right, from private equity. And, there is, I think there is a ton of interest, and there's some folks who are writing checks. And so that's good. But with those, there's a supply demand in private equity. There's a lot of dry powder out there, but, there's still risk that a private equity fund, has to contemplate the same risk that we were talking about, Kevin, the risk around, can these guys find a vendor to do business with? Can they insure their employees? How would they attract talent because of these types of problems? So, in general, I would say that private equity comes with a real premium, over and above even other industries that are high growth, be it a device industry or a pharma industry, early pharma industry. There's just a lot more premium that's required because of the risk that's out there.
Yeah, Chase, I think you're spot on there. I just ran into that recently with a client of ours out in Oklahoma looking to raise some private funds, and the premium charge was almost usury rates is what they were getting. So they're really struggling to get the capital that they need, to run a proper business, have the proper systems and controls and policies and procedures and personnel in order to run it just like any other company. So it is a problem. But Chase, what do you 'cause Kevin brought up the public market. What are the avenues that you're seeing companies take from a public standpoint, acknowledging that currently you can't technically go public in the U.S. given the federal laws?
Yeah, sure. Well, you guys follow the industry close enough. You probably have heard that, the Canadian Stock Exchange, the CSE, is also the CSE acronym is also known as the Cannabis Stock Exchange, because there are a lot of companies who have found liquidity by listing in Canada. But that is not a perfect solution by any means. In fact, it's lately we've seen it become less popular. In general, first off, in the U.S., essentially cannabis is regulated at the state level, federally illegal, but regulated at the state level for practical purposes. In Canada, federally legal, and you can list and trade on the exchange. In the U.S., you can be public, you just can't be listed. You can't trade on any of the exchanges. None of the exchanges allow the trading. In general, the risk that brings, if you're a foreign investor and you invest in a Canadian company doing business in the U.S., there are certain custom and border protection laws you can face should you try to enter the U.S. Detention, denial of entry, etc. So and then the other real downside is the requirement to list. In Canada, you can go public with U.S. GAAP financials, but eventually you have to transition over to a different set of accounting standards, mostly IFRS. And the reporting under IFRS is very different than U.S. GAAP for this industry. In particular, it's one of the most it creates one of the most contrast of any industries I've seen. So a lot of U.S. investors do not understand the financials, and it creates a lot of stress for the CFO trying to explain the IFRS financials to U.S. investors. So that's an option, but it comes with a lot of caveats for sure.
Well, it sounds like in some ways, the first place my mind goes, Chase, is it's like a bad law school exam in terms of all the international layers of civil procedure and complexities and everything else. But it sounds like what you're saying is there's more expense. You're going to jump through more hoops. There's no cheap path here.
Yeah.
Given the current regulatory framework, no matter where you go, whether it's on the private side, whether it's on the public side. But talk to our audience a little bit more about why going public on the Canadian exchange could be an option for people.
Sure.
If they so choose.
Sure, and good point, Kevin. And some of the companies that are public in Canada dual list on the Canadian exchange where they trade, but are also public in the U.S. So, to your point around cost, you have double the regulation costs as far as listing, if that's the case. And you may also have two different sets of financial statements, one under IFRS and one under U.S. GAAP. There are a lot of companies who have created very significant market cap cannabis companies by trading in Canada. It is still a very hot industry. You see various funds, EFTs set up in the U.S. Investing in cannabis. Liquidity is there for sure. It's not the perfect solution because of all these challenges within the industry. But in general, there is a lot of investor interest, lower than the private equity level, the individual level, where there are traders who want some action, and you can get action and you can raise liquidity through the Canadian exchange.
Yeah, I think that's a good point. And I think another thing to bring up, something that I've observed, is it's not just U.S. Companies that are going to the Canadian exchange for liquidity. I was speaking with a colleague in Colombia the other day, and he mentioned that their companies down there are also looking to go public on the Canadian exchange because it is, like Chase said, it's the cannabis stock exchange. The world is effectively trading there, so it's a very, very interesting scenario for companies. But in that regard, Chase, you mentioned the dual filing. In your experience, what challenges have you seen with companies as they perhaps previously worked or continue to trade on the Canadian exchange, but then also may have to file in the U.S. as well?
Sure. No, that's a great question. I would say the CFO's job becomes inherently more difficult should that be the case. The differences between the two sets of accounting standards are very significant. Under IFRS, essentially your inventory is subject to fair value. So you end up accelerating quite a bit of net income through a fair value adjustment to your inventory. It's a non-cash type adjustment, and so very similar to how you might fair value equity or debt. You're essentially fair valuing your inventory, and so your profits are accelerated. Generally, if you look at one set of financials, one under IFRS and one under U.S. GAAP, for a cannabis company, you would typically see under U.S. GAAP a 50 to 75% reduction in net income. So if you're a CFO trying to explain that to an investor that, is interested in the industry, maybe even knows the industry a bit, it's a hard pill to swallow, and it's hard to explain. It's hard to understand. We see some more sophisticated companies wanting to move away from IFRS if they gain scale and they found enough financing so that they can begin to present under one set of standards to eliminate that type of confusion.
What is the takeaway here, Chase, for companies who are considering, the fundraise or a liquidity event? I mean, we just did an episode with one of your colleagues, episode 2, where we talked about think about your end game on the front end. What's your exit strategy? And it sounds to me like that's still a key here. You need to be thinking about that on the front end. Is your goal to sell private? Is your goal to go public? But talk about how companies now can plan for that and put in place some of those steps so that they are ready to move if they hit that growth spurt and they're ready to do it, or they need the fundraise for operations or whatever reason they might want to get into this analysis, but they've got the building blocks already in place.
No, it's a great question, Kevin and Chris. You probably can contribute to this question as well. Generally, I think all options are still on the table for cannabis companies, and the solution that fits one is not the right solution for all. I think private equity is a very viable route, and I think that there is a lot more interest, but with that again comes an expensive investment. Um, a lot of cannabis companies or the larger cannabis companies are now moving toward the U.S. exchange, and they're watching the political environment, and they're watching this election season. The trading on the Nasdaq on all our exchanges, is not illegal. There just is no safe harbor that has been given to the exchanges to actually do the trading. So, politics is important. The Canadian exchange still is a very viable route if you can overcome those hurdles that we talked about. So, I would say that it depends upon the size and the facts and circumstances. But the more mature companies we see looking to list on the U.S. exchange to start explaining their financial results, I think it provides credibility to private equity. I think it provides credibility to everyday vendor to be public, and to have SEC financial statements. Of course, you can't trade now, but that spigot could be turned on with some political maneuvering. So I think a lot of folks want to be there.
Yeah, that's an interesting point. You talk, not to get political on this podcast, but irrespective of who wins the election that's coming up here very shortly, if for some reason the tides were to change in the United States, you're suggesting that some folks may be chilling on going public right now, but getting their ducks in order to go public in the United States if that market opens up, is what I think I hear you say.
Yes, the more you read, the more you talk to these companies, I think there is a real interest in being having your financials filed with the SEC, and having SEC financial statements ready, perhaps having done an S1 to have public ability to trade should the political tides turn. We definitely see that. In the interim, I think having the credibility of having your financials approved by the SEC provides a lot, whether it's to the private equity markets or again to your state charter banks, to vendors in general who provide services to cannabis companies.
Yeah, Chase, I think you kind of hit the nail on the head with one word there. It's credibility. To get back to Kevin's original question, I think that's what companies in this space need to focus on, is ensuring that they have the proverbial house in order. Whether that's from a financial standpoint in terms of policies and procedures, or systems or whatnot. But the ability to demonstrate credibility is going to lead to their ability to either raise capital to expand fund operations or otherwise, or when they want to exit. So whether that's private equity, venture capital, going public, trading in Canada or in the US at some point in the future, it's really all about that credibility of the operations and of the personnel and the people that are involved. And that has to be a focus from the get-go. Because as we talked about last podcast, Kevin, every time a business starts, you should be thinking about the exit.
Absolutely.
Yep.
And that's a key component, especially in this industry.
Yep. Well, this has been great, guys. That's our time for today. Chase, thank you so much. This was insightful. This is great. I love the ongoing conversation, kind of real time as we're watching things emerge here, even politically and in this space. Chris, thank you as always. As everyone who's been listening knows, you can catch this content on the website for Cherry Bekaert and Carlton Fields. This has been episode 3 of Ledgers and Law. We hope to see you for future episodes. And if you enjoy it, reach out and let us know. If there are topics that you'd like to hear about, do that as well. And thank you very much. Everybody have a great day.
Thanks, gentlemen.
You've been listening to Ledgers and Law, Lessons from the Trenches with Kevin McCoy of Carlton Fields and Chris Rux of Cherry Bekaert. This podcast is intended for general information and educational purposes only and should not be relied on as if it were advice about a particular fact situation. The distribution of this podcast is not intended to create, and receipt of it does not constitute, an attorney-client relationship with Carlton Fields or client relationship with Cherry Bekaert. Thanks for listening.